Well, you're watching Open Exchange, an innovative investment app, ReturnX, could make you your own stockbroker. The app sources analyst estimates for companies listed on the JSE, and it calculates expected returns for those companies' shares based on the estimates. Now, the designer and developer of the app, Missankov, is here to share his insights into this new technology. Ivan, how does this work?
David, hi, good morning. So it's not so much a stockbroker, it would make you your own analyst. We like to call it maybe your own pocket analyst. So we built, it's a team effort. There's a couple of IT guys who worked on it as well. So I had a hand in designing it, the look and the feel of it. So what it does is, now for companies listed on the stock market, the analysts who cover these companies, typically the sell side, the broker analysts, and they publish estimates, earnings and dividend estimates for these companies, and these numbers are available. So now what we thought we would do is we would build this app from your phone, which would plug into a Bloomberg type data provider and would access these estimates for each company. Now, for the particular company that you're looking at, for example, we spoke about Tiger Brands, which is coming out with interim results this morning. It would plug into Bloomberg, pull the estimates, the analyst estimates available for Tiger Brands, and based on the current share price, it would calculate an expected rate of return for that share based on each analyst estimate. So if the analyst estimate turns out to be correct over the next 3 years, ReturnX will then calculate an expected rate of return for you. Now, why is this good? Why did we want to do this? 3 reasons. One, when the analysts publish their estimates, they would publish something like 240 cents a share. To the investor, the non-professional investor, that means nothing. It's not information they can use. So the first thing ReturnX does is it turns it into a rate of return which you can use. If it's 5%, it might be too low for you. If it's 20%, you might say, hey, great, this is good.
Is it entirely quantitative in the sense that it's arithmetic based on their numbers?
So we're dealing with shares and we're dealing with finance, and like it or not, there has to be a little bit of understanding of numbers, so we can't get away from that, and that's just a requirement if you're dealing with stock markets. All right. Having said this, we've done our best to make it as easy to understand and to use as possible. One thing I haven't mentioned is once it calculates the rate of return per analyst estimate, it breaks it down into components to give you an insight how this return is made up. How much will come from dividends over the next 3 years, how much will come from earnings growth, and what's particularly relevant in the market right now, how much could come or be lost from re-rating or de-rating of the share. And I emphasize this because I think professionals in the market are very aware. P's are very high, multiples are very high, markets are very high. So if in 3 years' time your shares re-rate to a long-term average, you're exposed to losing money, and the app will show you that.
So are you marketing this now, selling it?
We've just launched it. It's available on the Apple App Store for iPhone. It's available on Google Play, which is the Google App Store for Samsung-type phones. It also works on iPads, but it's not designed for an app.
Thanks to Ivan Missankov, who is the ReturnX app designer and developer.